And I still think the COVID crisis was a cover for a major banking crisis. That's the way I see it. So this is why it's so important. And you can see that the repo is starting to spike again. Tuesday, December 2nd, 2025, Maneco 64, home of alternative economics and contrarian views. So looks like trouble in the repo market continues. I spoke about this about a month ago on November 4th, that there were signs of trouble in the repo market. And we're going to touch upon that today again. And yes, some of you might remember, but that in 2019 there was a major repo crisis. And I'm going to come to what a repo is in a minute. But yeah, suffice it to say, back in September 2019, and I covered this at the time, it led to the Fed stopping the quantitative tightening and actually doing QE again. They call it not QE. And it's interesting that right now the Fed has stopped QT as of the end of November. So I wouldn't be surprised if we start seeing QE as well. And when I spoke about the repo market back in early November, it was more related to like the basis trade, which is a derivatives trade on the treasury market. But now, could it be that the repo market is flashing warning signs about the bullion banks? Well, we'll touch upon this a little more in detail in a minute. Before I do, I'd like to thank all of you for your support of the channel, for all the new subscribers. And I want to reiterate that if you watch my videos, make sure you subscribe. Make sure you hit the like button if you enjoy my videos. And yes, share as well far and wide. Anyway, there's also a few things I just want to touch upon before we go into the repo situation. And that's in the UK. I noticed the first point is the UK. I noticed that yesterday the gilt market came off. It looks like the honeymoon for the UK gilt market and the Chancellor of the Exchequer is over. I think we need to keep an eye on that. The Venezuela situation, what do I think about it? Well, I think it's going to backfire on the United States. And I think it's a huge distraction. It's President Trump trying to get a win, right? Why do I say it's a huge distraction? Well, because I saw that there's news that the FDA has actually come out and said that the COVID things, the treatments, killed 10 children, right? And supposedly Venezuela is a big narco state, drug-pushing state, or country, right? But I would say the biggest drug pushers are, well, they are the big pharma companies. And where's the action against them, President Trump? Well, maybe it's because, yeah, you supported them in 2020 with these mRNA treatments, right? I remember it really well. And now you're trying to, like, yeah, put the spotlight somewhere else. These are the bad guys in Venezuela. Yeah, and I think it's going to backfire because the rest of South America and the rest of the global South is going to, yeah, they're going to not be too impressed with this interference in another country's sovereignty. And yeah, I don't care about the Monroe Doctrine. That's like something from the past, in my opinion. The other thing it does, it gives China an excuse maybe to do something vis-a-vis Taiwan. I mean, they have more of a claim on Taiwan than the U.S. has a claim on Venezuela. Taiwan is a renegade province of China, right? Technically, if you want to look into the history, you do it. But Venezuela is not even a renegade state. It's not like they seceded during the Civil War and went to Venezuela, right? So that's how I see this. And I think it shows desperation from the administration because the economy is not in good shape at all. I think the statistics are going to be showing this going forward, especially the jobs numbers. And if the economy was doing so well, why would President Trump and the administration be talking about a $2,000 stimulus check to families that are on less than $100,000 a year? It just goes to show that things are not great. So that's what I wanted to put out there. Keep an eye on the bond markets. I think yields could rear their ugly heads higher here in the UK. It's been doing it in Japan and in the US as well. It could be a reason for the Fed to intervene with not QE, right? So back to the repo. That's what we're here to talk about today. The repo market. So what is the repo market? It's a very arcane and like a specialized part of Wall Street, of any financial system in the world. And it's basically where the financial system gets its funding, day-to-day funding. Some people call it the plumbing of Wall Street is the repo market. I made an analogy back on November 4th, and I'm going to put that video, a link here up here, and you can watch it. That basically a repo market is like a pawnbroker. So if you need some cash, you go to the pawnbroker with your gold necklace, and you borrow some cash against it, and they give you 60% of the value. They charge you an interest. And then you come back and you buy it back. It's not really, it's like a buyback. You buy it back for the higher price, and that price embeds the interest. And that's all it is on Wall Street. It's financial institutions borrowing and lending to each other, like the big primary dealers from the New York Fed District, which are the big New York banks and also international financial institutions. They borrow and lend to each other. They borrow and lend to hedge funds, private equity, family offices. And they do it, they don't use gold necklaces as collateral. they use usually top-notch quality, right? Treasuries as collateral, U.S. Treasuries, sometimes mortgage-backed securities, which are government guaranteed. And that's all they do. They do it overnight, most of it. They give in the collateral, and they sell the collateral at a price. They buy it back a little higher. They pay the interest like that. And it shouldn't be a problem because, treasuries and mortgage-backed securities are guaranteed by Uncle Sam. But what's been happening and what happened back in 2019, as you can see by this chart, is that the Fed had to intervene. They had to bail out the repo market because financial institutions didn't trust each other. They thought there was something wrong. So they wouldn't even do a repo overnight with other institutions. And if they did, they were charging like 10% at one point, and the Fed funds rate at the time was like 2.25%. Usually the repo rate should be close to the Fed funds rate. So that, as you can see here, the Fed had to really step in back in 2019 and 2020. And they started as well a massive amount of QE, as you can see here. You can see that as of September 11th, 2019, they were unwinding the balance sheet. They were doing QT, and all of a sudden they started doing QE again. And then by March, they had to really put the foot down on the pedal, and they printed well, let's see, from the low in August 2019, 3.7 trillion. By April 2022, they were up. They printed like $6 trillion just to save the system. And I still think the COVID crisis was a cover for a major banking crisis. That's the way I see it. So this is why it's so important. And you can see that the repo is starting to spike again. And in October, it peaked at 29.4 billion. It dropped back at the end of November to 11.25 billion. And now in December, it's gone up again at $13.5 billion, which is the largest amount since the previous repo crisis, which actually didn't start with COVID. It started before COVID. And back on November 4th, I was talking about the fact that the repo situation could be related to the basis trade, which is basically hedge funds buying and selling. Let's say they buy the cash bond and they sell the futures, right? Or cash treasury and sell the futures. They make a tiny little profit. The basis trade, and I can tell you, I worked as a futures and options broker in treasuries, in government bond futures, and basis trade is not really wasn't really a huge trade because it's like picking pennies from a highway or motorway, as they call it in the UK. Yeah, it's very dangerous. You could get run over. But now there's so much leverage in the system that the hedge funds are using massive leverage to do these repo trades, and they're doing it offshore in the Cayman Islands. I think the Cayman Islands now, they hold $1.8 trillion of U.S. treasuries. So not only is this basis trade risky and could put the treasury market under threat with volatility, but it's also supporting the demand for U.S. treasuries. Yes, it's foreign demand, right? Even though the Cayman Island is just like a money laundering, like I would say, place for the hedge funds, right? For the elite. That's where they put their ill-gotten gains, and they pay no tax. And the Fed was worried that they didn't realize there's so much treasuries being held in the Cayman Islands, and it's not held by the Cayman Island Teachers Union. It's a tiny country. Their GDP is like something like infinitesimal compared to let's say the United States. But now with what's going on in the precious metals and what we saw last week overnight from Thursday to Friday vis-a-vis COMEX and the bullion bank shorts. And the bullion banks, of course, are the same people involved in all these repo funding, in all the funding for the basis trade. Some people are saying maybe the repo market is picking up again, or the Fed's having to intervene because the bullion banks are in trouble, and it's highly possible. So I think we really need to keep an eye on the repo and repo market. It is flashing warnings. Back in September 2019, I remember covering it, and yeah, a lot of people were saying, and me included, that it could lead to big problems, and eventually it did. So yeah, with that, let's quickly look at where the markets are this morning then. It's 8:20 a.m. London time. Yes, gold yesterday and silver did very well. We're seeing a little bit of a correction here. As always, markets don't go up or down in a straight line, but I think silver still looks really good. It's all kind of relative and psychological. I mean, silver started the year around 29 and we're now at 57.30. Yes, we're down from the high. High yesterday, it was 58.88. I think in the spot, almost 59. And I'm hearing again that Middle East central banks, what they're doing now, they're buying silver straight from the mining companies, and they're buying future production as well. They're doing deals with them. Hopefully, the mining companies are not selling it too cheap forward. But why are they buying from the mining companies? Why don't they just buy from the exchanges? Well, I suspect there is not much physical silver to buy, and that's why they're buying from the miners. The other thing as well, if these foreign central banks start acting, or if they start buying a lot of futures on COMEX to take delivery, it's not gonna happen. The regulators, the U.S. Treasury, they're gonna stop that right on its tracks, just like they stopped the Hunt brothers. But this time, though, it's more than just the Hunt brothers. It's a big chunk of the world wants silver, and so does the United States. So does China. They've made silver a critical mineral. And yes, with what's going on monetarily as well, silver and gold are becoming more and more important. People are going to wake up and realize that they've been lied to about what money really is. Well, you've been awake if you've been listening to me for the last 10 years or so. So you don't have a problem. You'll be able to protect your savings. Hopefully, you have been stacking some physical gold and silver. Hopefully you have some silver miners as well and gold miners in your portfolio. But yeah, as I said, we're down a little bit. Gold is at 42.14, down $17. Low's been 41.93 and the high 42.36. Yeah, we got up to, I think, 65 yesterday, 42.65. I think 42.45 is a key resistance. It's a previous high that we've seen in the last month or so, and I think they're trying to keep it below that level. Silver is at 57.30, as I said earlier. It's down 67 cents, or just over 1%. The low's been 56.57. So yeah, we're going to continue to see volatility. And as I've said many times, you got to be right and sit tight. You got to hold on to your hat. All these sayings apply, and you got to be patient, and you got to stick to it, and you got to hold on as well to your gold and silver for dear life, because it's going to get more and more choppier. But I can promise you, because I've been doing it for over 20 years, the more immune you get to these moves, the easier it gets as the market keeps going higher. What about the stock market? Well, the Dow's down 50 points, S&P down 10, NASDAQ down 46, so not much happening there. Currencies as well, not much happening. The JGB market in Japan has stabilized for now. Let's check. The gilt market is pretty quiet so far this morning. But yesterday we saw yields rise quite sharply. The 10-year yield is back above 4%. It's at 4.10. I've noticed the 30-year yield, US 30-year, is at 4.75. So not that far from 5%. So with that, I'm going to wish you all a very good day. Take care. Bye.